Hello, folks. It is Saturday, March 4th. It is March already. 2023 is going quickly. Let's take a quick spin through the charts today. I'm going to focus mostly on the daily charts. We'll take a quick look at the monthly and weeklies. Here's gold in the monthly time frame. No changes. We're just sideways bumping inside this flag pattern. Target still 25.10 thereabouts. MACD in bull mode, energy elevated. Don't quite have a new buy signal yet, but probably not long before we get one. Here we are in the weekly time frame for gold. Nice strong bar last week. That's a very bullish price bar. Notice that price closed almost on its high. It's about what is that, 70 cents? Less than $1 off of its high. So anyway, very bullish action, pushing up into resistance. So we've got resistance at the 10-week moving average, and then this is the second lower median line extension of this shift pitchfork. So a couple of layers of resistance to work through. MACD in bull mode, still on a buy signal, kind of right on the line there. Energy mid-range. So nice action last week in the weekly time frame. And then here we are in the daily. So last time we talked, price was down here testing the 62% Fibonacci retracement level for support. Obviously found support there. We're getting a nice bounce over the course of last week. Pushed up through the 50% level and up into the 20-day moving average and found resistance there and backed off a little bit. MACD still on a sell signal in bear mode, but very close to giving us a new buy signal. Energy elevated and rising rapidly. Let's move on to silver. This is silver in the monthly time frame. Not much to say here, just kind of hanging out there mid-range between those support and resistance. MACD right on the zero level of the indicator. Looks like we're on a sell signal currently. I wouldn't put much into the MACD indicator right now. It's flat. It's on the zero level. Not much to be said about that. And energy mid-range. So nothing exciting in the monthly silver chart. In the weekly, I'm still expecting, this is a strong up leg, definite correction or pullback, and I'm expecting the next up leg to start any day now. MACD in bull mode, but on a sell signal, energy is low. And so that's the silver in the weekly. Let's drop down to the daily time frame. Had some nice action. Again, last time we talked, we were down here testing this level for support. Support was found there. Price pushed up into the 200-day moving average. And now we'll have to push up into and through this overhead resistance. We've got this horizontal support resistance zone, 20-day moving average. So a couple of layers of resistance. MACD has become almost as oversold as it was way back here in July of 22. And so MACD very, very oversold in relative to the last 9 months or so. MACD oversold, ready for an upturn. Looks like we might get a new buy signal here shortly. Energy has turned up and is rising sharply. So not bad action in the daily time frame of silver. Mining stocks looking nice here in the monthly time frame. Excuse me. Got lunch trying to put me to sleep. We've got price pushing up into the top of this downsloping channel. Found resistance there and pulled back. Now we're pushing up into that level again. Still on a sell signal and in bear mode, MACD and energy mid-range. We'll drop down to the weekly time frame. Nice candle last week, bullish action, MACD in bull mode, although on a fresh sell signal, energy is low but has turned up. So several layers of resistance overhead here in the mining stocks, weekly time frame, horizontal support resistance with the 10-week moving average just overhead. So nice volume picking up. Excuse me. Wake up. I have to go do my exercising. Here's the junior miners GDXJ in the daily time frame. This is really pretty action. So again, last time we talked, we had tested this level for support, and we're getting the start of this uptrend, and it has continued throughout last week, pushed up through and past, actually jumped over, gapped over the 200-day moving average, and then 2 more days of pushing higher. So, and then on Friday, dealing with resistance at the 20-day moving average. Got this horizontal support resistance zone overhead. That'll be resistance to be worked through. Note that we got a new buy signal on Friday. So new buy signal in the mining stocks. Energy is quite elevated and still rising. So very nice action in the mining stocks. Strong correction and a steady uptrend after that correction. So mining stocks looking good. I'll be buying some mining stocks Monday, Tuesday. There's 4 in particular that I'm looking at. I'll cover those in a separate video, but the mining stocks are looking good. That's nice action. That's a fresh buy signal. Energy is elevated, and so I'll be light buying. I mean, I'm well invested in the mining stocks already, but I will be doing some more light buying at the start of the week. U.S. dollar monthly time frame. Playing with resistance at the upper median line of this shift pitchfork. Still, MACD is fairly overbought. Energy mid-range, not a lot to say. I guess it's worth noting that price or the dollar is up above this support level. And of course, it's never really proven that it's support. It didn't hold as support there. It did act as resistance, and then price is pushed above that level and perhaps is testing it as support now. So let's see, in the weekly time frame, pushing up into overhead resistance, still on a sell signal in MACD. But MACD is in bear mode, suggesting that the primary trend is down in the weekly time frame. Excuse me again. Energy mid-level. So U.S. dollar in the daily time frame has not been able to push up through that resistance level yet, but hasn't given up yet either. So we've got MACD in bull mode, still on a buy signal. Energy is elevated. So the conditions are right for the dollar to continue higher if it chooses to. Of course, this is sideways action. Again, the dollar didn't pull back. It's not doing a correction. It's just bumping sideways. And when we see any vehicle, doesn't matter what it is, these sideways consolidations, we can think of that as price gathering its energy for the next move. And of course, we don't know, will that move be up or down? But that's what's going on here. That's one way to think of what's going on here, is that price, or the dollar in this case, is gathering energy for its next move. Tim Morge talked about these kind of formations as being price coils or price springs. The idea, again, that we're gathering energy, getting ready for the next move. And a point that Dr. Morge made is that the move out of a coil is likely to be impulsive, because energy has been collecting for a while. In this case, what's that? Probably 6 trading sessions. There's enough energy to get an impulsive move out of that formation. Let's keep moving. The debt markets. Oh, what can we say about the debt markets? So we were getting several months of sideways action. Central banks were kind of holding action. Nothing new happening. And then last month, rates started rising again. And now in March, that's this little bitty doji so far. Rates are remaining high. Bull mode, buy signal, energy very elevated. So could certainly expect interest rates to continue rising based on that chart. This is the 10-year yield on the 10-year Treasury note, weekly time frame. Yield has pushed up through the level of this prior minor peak. We've got a full week above that level, and then last week we're getting a doji. We might look at that as an evening star in Japanese candlestick terms, which of course is a topping candle, could be a topping candle. Energy elevated, but appears to be rolling over, could be rolling over. MACD in bull mode. Looks like it wants to give us a new buy signal. I expect, or I suspect that interest rates will continue moving higher across the board. Here we are. This is the yield on the 30-year bond in the weekly time frame. Somewhat sideways, but still upward. This past week ran into resistance. This is the upper median line of this shift pitchfork. Appears to have found resistance there and pulled back. MACD in bull mode. Looks like it wants to give us a new buy signal. Energy is elevated. So again, I'd be expecting higher interest rates. This is interest rate on a 30-year fixed rate mortgage, 7.4. That's not good. We're moving into spring buying season for housing. A lot of places, cold and snow and, holidays and everything, people aren't buying houses during the winter. And then as the weather warms up and gets prettier, people start coming out of the woodwork to buy houses. But so far, early indications are that ain't happening yet. So we're not getting spring buying yet. And of course, mortgage interest rates are hurting first-time buyers. Well, all buyers, they're all hurting on 7.4% for 30-year fixed. I don't know about you, but I won't buy real estate on anything but a 30-year fixed. My expectation is interest rates are headed higher for longer than people are expecting. Don't get trapped in an adjustable rate mortgage, particularly now when real estate prices and markets are softening. But being in a short term adjustable rate mortgage, just not a good idea in my opinion. I've never understood it, but to each their own. Bitcoin daily time frame bumped into resistance, rolled it, slow decline, and then on Friday, pretty big. What is that? That's 5%. Doesn't look like much, in the scale of this chart, but that was a 5% decline on Friday. So that's a big move. Doesn't matter what market it is. 5% is a big move in one day. A lot of volume. That's not pretty. If you're a bull on crypto, Bitcoin, 5% decline on climbing volume is not bullish action. And of course, we're on a sell signal, MACD, energy declining sharply. So get out of crypto while you can. Not the first time I've said that. Equity markets, my expectation is that these are counter trend rallies. It's on all three. We'll look at the other ones. All three of the equity markets, that very sharp upward action started on Thursday, follow through on Friday. Both of these are very bullish candlesticks. Notice that price closed very near the high of the day. That's bullish. Overhead resistance, 20-day moving average, and this horizontal support resistance zone. When we get sharp moves to the upside or to the downside, if we're in a bullish move, they tend to be counter trend movements, meaning they're not. I suspect that this is not the start of a new uptrend. This is just a counter trend rally to work off some of this downtrend, and then I would guess we'll see price roll over at the 20 or up here in this horizontal range and then roll back over. Didn't mean to do that. MACD, right around the zero level, currently on a sell signal. Histograms hinting that we're moving towards a new buy signal. Energy mid-range rising sharply. So kind of indeterminate at this point, but I would lean towards this is a counter trend rally, not the start of a new sustained uptrend. And of course, interesting, I was just thinking about my bias. What I just told you, that's my bias against equities. I'm not a fan of the stock markets. Wall Street is populated with crooks. When you're playing in the stock markets, you're playing their game. And so, they got the home team advantage. I like the mining stocks. I play with the mining stocks, but I don't do any other stocks. So S&P in the weekly, nothing really exciting to see here. Looks like we found support on the 40-week moving average, potentially bouncing from there. We're on a buy signal. MACD is up in bull mode, just barely. Energy is elevated. So in the monthly time frame, hanging out, we're down, I don't know what that is, 15% or so from the peak. We're not officially in a bear market, but my belief, my bias is that this peak marks the peak price for some period of time, probably several years. We're in a secular bear market, multi-year bear market in equities. And so be careful with stocks. MACD in bull mode on a sell signal. Energy is mid-range. Here is the Dow in the daily time frame. And again, very sharp move to the upside there's bottoming candle on Wednesday, and then Thursday, Friday, two sharp moves to the upside. Counter trend rally. That's if I was betting, man, I'd bet on that being counter trend rally. MACD in bear mode, energy mid-range and rising sharply. Dow in the weekly bumping sideways, got resistance overhead at the 10-week moving average. Dow in the monthly, nothing exciting there. NASDAQ, very, very sharp movement to the upside, found support at the 50, sliced right through the 200-day moving average, had a little bit of a gap up Friday morning, and then pushed steadily higher up into the 20-day moving average. So nice sharp move to the upside in NASDAQ. Again, I suspect that that's a counter trend rally. Here in the weekly time frame, NASDAQ pushing up into resistance at, this is the upper median line of a shift pitchfork, and then the median line of this Andrews pitchfork. So 2 layers of resistance overhead, and then of course we're going to have resistance from those prior peaks as well. So a lot of overhead resistance for NASDAQ here in the weekly time frame. We're on a buy signal. MACD mostly in bear mode, but heading up into bull mode. Energy is elevated. NASDAQ in the monthly, definitely in bear mode, well under 20%, actually under 27%. So definitely in bear mode. Yeah, so equities not looking good in the long term, counter trend rally in the short term. That's how I'd sum it up. Brent crude hanging out below resistance, sideways bump in action, MACD in bull mode on sell signal. Energy is very low. Not a lot to say about oil at this time. That's all I've got for the charts. I'm going to get this posted, and then we'll be looking at some mining stocks. So as I said, I'll be buying some mining stocks in the coming week. Talk to you soon, folks.